Today, we have an exceptional guest with us, Albert Wang, a partner at Parameter Ventures, a New York venture capital firm specializing in enterprise software. Albert, you're also an active advisor and investor at the China project. He brings a wealth of experience in product management, engineering, having led unicorn companies like Datadog, Materialize, and Crunchyroll. Recently, Albert, you founded and raised funds for your own SaaS venture, Bearworks, which is a revenue intelligence startup that supercharges sales teams to be more productive, leverage insights, and feel more connected. Today, we'll be discussing Albert's fundraising journey with Bearworks and how it's uniquely inspired given his investment experience with Parameter Ventures and the China project. Welcome to our podcast, Albert.
Awesome. Thanks so much, Priyanshi. It's great to be here again and great to see you again.
Yeah, I remember our time working together with you leading product at Datadog. And I remember you were one of the first interviewers I met at Datadog. uh,
I'm much more nervous now on the other side, let me tell you.
so to begin with, can you share your journey with us from being a product director and startup investor to becoming an entrepreneur today with Bearworks? Like, what were the moments or experiences that influenced this transition?
Sure. I guess I'll take it back from the very beginning. So originally a software engineer, switched into product management, like your introduction. So I started on consumer software, doing kind of full stack engineering and also managing ads and running sales at Crunchyroll before switching into enterprise software. And the thought process behind that was that enterprise software is very accretive. So the things that you've learned from your career, whether it's random things in university or different jobs, it's ultimately about solving problems and working with people. And it's kind of been very lucky and proven that way in my career. Um, one of the things, one of the reasons or hypotheses I had behind going to data miner and Datadog was kind of very typical MBA, kind of interested in growth of data and how data products and platforms will be sticky. So because of that startup experience at Datadog, they asked me to launch new products, like their application performance monitoring product and mobile monitoring and all those kind of things. So kind of sticking with that data thesis, after Datadog had a product at Materialize, which is a streaming snowflake. Worked with some world-class engineers on some really hard problems. And if I can kind of help with any of your listeners, it's an incredibly fun space to be working on databases. Building a database is extremely difficult, because people entrust you to deal with their data and not with their data. So after about a year there, decided to go in and do my own thing. So launched Bearworks. Been working on it for about 2.5 years now. We started actually just myself kind of coding as a nights and weekend project. It's kind of exploring different pain points and challenges, kind of trying out the modern data stack, as well as doing a lot of user interviews and actually hitting up our Datadog network and talking to anybody who would be willing to talk with me. About a year ago, we were lucky enough to fundraise. So we raised a pre-seed seed from Index and ENIAC. And so when they decided, hey, look, we want to work with you from the beginning, was very, very flattered and lucky. And ENIAC is very similar, kind of both New York-based team of investors where we kind of work hand in hand and go through this early journey, kind of wandering the forest together.
Yep. That's wonderful to know. And if I'm not wrong, you've been in the industry with sales, engineering, and product management for more than 2 decades now. So we would be delighted to know how has your background kind of shaped your approach to entrepreneurship and especially fundraising for startups.
Okay. Yeah. So maybe I'll start with my career first and then switch to the fundraising. So I think in consumer software, one of the things that I loved about it and one of the reasons I switched away is that it's very tangible, right? You know what you're doing. It's something you can tell your family and your parents about. Ultimately, it's about trying things out and just moving as quickly as possible and throwing things on the wall and seeing what sticks. And like I mentioned earlier, that's one of the reasons I switched over to enterprise software. It's kind of now that I'm mid-career, it's kind of helped me leverage, the network and all the things we've done and all kind of knowledge experience. So when it came time to fundraise, kind of started by speaking with um, various folks in my network. I think, like I mentioned, the nice thing about being in tech, you'd be surprised at how many folks are, especially in the Bay Area and in New York, how many folks invest on the side. Um, there's a lot of people who are scouts or angels. That was a big lesson for me. But I just started by talking to institutional investors, going down my list. Talking with the um, multi-billion dollar funds that have been around for a while. I think a lesson also learned for me is that in any market that's big enough, it's segmented in different spaces, and so there's even pre-seed and seed investors and folks who are day one checks. Like the ENIAC. There's in New York we've got a number of funds. Next View and Bold Start and Workbench, they're all also kind of day one checks, and they specialize in this, talking to entrepreneurs when it could be just an idea on the back of a napkin. And so, it started as a very kind of casual conversation, just catching up with friends. I guess it's open secret now, but updating your LinkedIn to stealth startup is one of the best marketing things you can do for your career in terms of talking to investors. So, started with just kind of casual conversations for, um, I'd say, 6 to 9 months, and then decided, we figured out what we were going to build, figured out the team. Once that team started to coalesce, we decided, hey, look, let's raise a small little round, and it kind of we were able to get this team behind us that we have today.
So, with this wide network, was there any strategy involved in you choosing an investor, or even the stage at which you wanted to kind of dilute your company, or look out for funds? How did you
Yeah,
decide that?
definitely. So I think, conventional wisdom. There's a ton of great content out there, right? They'll usually say, um, have a lot of dry runs, talk with your other founder, any of your friends that kind of do your pitch, and then talk with your kind of whatever your tier one prospect is going to be, right? Maybe people who've done deals in your space, somebody you really want to work with, and something like that. Stage them toward the end, and so we follow that strategy. The thing I learned is that there's no right and wrong way to fundraise. It's actually towards the end of our process. We met with some investors, and we'd already filled out our round, and they're like, oh, if only we had met earlier, because they wanted to get involved from the beginning in terms of helping you find the right team of advisors, helping you think through the right product and project and stuff like that. And so there are there's a lot of investors who are truly want to be partners, right? They get it. They understand that your idea may change a lot, and they will connect you with people in the network to help validate or become potential customers. And so um, I think once you decide to do your fundraising process, some other founders who were 6 to 12 months ahead of me, they gave me some great advice, which was, start your process, get through the process. It's going to be a little bit, um, it's going to feel pretty intense, but you want to get through it as quickly as possible. And if not, it's okay. That happens to everybody. But um, the tricky thing about fundraising is, especially in the early stages, is it's not a purely quantitative process. It's not about the numbers, right? So it's about, for better or for worse, people look for specific signals in which they choose to make an investment, right? And whether it's, hey, look, this person has track record in a space, they're trying to do it again. Whether this person has track record in their industry, what have they done with their resources, right? People understand that if you're a solo entrepreneur, you don't have all the resources in the world, but what are you able to accomplish with it, right? And so, what kind of traction? Talk about traction later, but what kind of signals you can get, and so it's kind of stitching together, this kind of mosaic from what few data points you have. And in the early stage, it's all about people, both in both directions. What people you want to work with as an investor, and what people you want to work with as a founder. And so um, it's a lot of conversations.
So, as you noted, fundraising can be a daunting and intensive task, to say the least. And the startup founders we work with often find themselves in a puddle where they have to choose between, starting their fundraising journey versus actually spending time developing their product. So, how did you like navigate this challenge, and how do you keep yourself motivated and working on both during this fundraising landscape?
Yeah. Um, so once we decided to kick off the process, we got very, very lucky with our process. So it was I think no more than a month. It was only a few weeks. And you're basically trying to take as many meetings as you can in a day. Worst case, 5 to 7, but you're trying to do around 2 to 4, 3 to 5 meetings. And then in the evening, you're kind of debriefing. You're taking feedback, updating your deck, iterating on those things. Investors may have questions for you, especially as you go on a process. So, in a diligence, they may say, "Oh, what do you think about this? Can you clarify what this was on the roadmap? Can you share some of your customer interviews? And we'd love to talk with some of your prospects." And so, um, it's the fundraising process is a lot more than just the meetings. You're in the evenings. You're up, kind of scrambling, scheduling more meetings, all those kind of things. And so, to your question, Priyanshi, I think there's not a lot of time. Usually, people will dedicate one person to lead the fundraise. I don't think there's great content out there, right? I won't rehash what's out in Twitter post, but you don't need to have both co-founders on every single meeting.
Mhm.
For first meetings, it's one-to-one tends to be right. It's more about what kind of vibe you want to have with your investors. Some can be coffee chat. People love to have face-to-face person meetings now again, which is nice. But there's still the world has changed. So some deals are done by Zoom and without ever having met the investors or founders in person. So um, I think to going back to your question, I think um, if you anticipate it being a longer process, it's nice to have, depending how big your founding team, one person dedicated to fundraising, the rest of the team kind of trying to focus on the business, but so that it's not just a huge time suck, but it inevitably tends to be.
Makes sense. So you've been actually on both sides of the table as an investor as well as a fund seeker, as a startup founder. What does a founder look for when they are seeking funds? What kind of investors do they prefer, and what qualities should they look for when giving a part of their company to someone?
Yeah. So there's no one thing. I think it's a very soft skill, right? It's ultimately about people. So the kind of classic framework way to think about this, there's your product, what's the wedge you're trying to drive and solve the pain point. What's the market? How big is the market? How attractive is the market? And ultimately the team. And so you can break those different dimensions into subcomponents. Let's start with market. Is the market economics, is it concentrated? You can kind of do a Porter's five forces analysis. I think we might have had you do in your interview, but kind of thinking through, is it concentrated? What are the customer dynamics? What's the power of the suppliers? All those kind of things. And so people think about what is the market opportunity, right? Is it $1 billion opportunity, growing, and how quickly? Um, I think the product, obviously, what is your wedge? How big of a wedge? Is there a catalyst? And what's the technology change? Why now? And the biggest one is why you, right? And so team, obviously, um, people who are repeat founders, repeat entrepreneurs, depending on the investor, right? Every investor looks differently, but I think I work with Parameter. We tend to follow under the majority, where if anybody's crazy enough to want to do it again, who's had your head beaten down and banged on the wall, if you want to try it again, well, good for you. You have the odds of success are actually in your favor. But going back to the team, I think for better or for worse, people tend to resonate with people who are similar to them, right? It's not necessarily a good thing, but when you get introduced to an investor, when you reach out to them, it's just like typical sales. You're trying to connect with that person on some kind of common wavelength, whether something you did together or some industry you work together, common people that you. something like that. And that's why I think referrals, warm introductions help so much, and especially in venture capital. I think going back to the team, team size and team composition makes a big difference. I'm sure your listeners have seen a million pitch decks, but you have those logos of what brand name company or what brand name school you work for. Um, but not only that, I think you're looking for risks. Investors are often thinking about it from a risk perspective, and what is the risk you're seeing from this entrepreneur? It's okay, if you've never built a multi-billion-dollar business before, but that's just something you should just be aware of, right? And so when the time is right, you might want to supplement the team and beef up on those whatever angle it may be to offset your risk.
Talking a bit more about Parameter Ventures, I hear that there's a distinct focus on enterprise software. Can you tell us a bit more about your investment thesis and, with your experience, what excites you about this renaissance in enterprise software today?
Yeah, sure, of course. So Parameter Ventures, for quick background, we're a New York-based VC firm. We're kind of purpose-built to help enterprise software startups get off the ground, just like you said. We kind of focus on seed and Series A checks. And one thing we're different is we've kind of built and created a number of kind of category-defining startups, especially in the New York City ecosystem. So we have a particularly deep focus on product management. A lot of our uh, partners are former product managers, current or former product managers. Places like LinkedIn, places like Flatiron Health, like Intuit, like Datadog, like Data and Tumblr. These are all places we've kind of helped build and learn ourselves, and so we really kind of view ourselves as product first. And so going back to your previous question, Priyanshi, about picking your investors, I think that's one area where um, entrepreneurs, it's very difficult, I get from the outside, but spend time with the firms, understand how they're different and how they think, whether it's on their investing style, their thesis, or how they offer portfolio support and how they work with their founders going forward. Um, Going back to kind of areas of why parameter, why enterprise. So we're super excited, obviously, first of all, about the New York ecosystem. I think it's been a long time coming. I've been here for 10 years. It's an amazing place now where there's so many founders coming from different walks of life. There's so many different Fortune 500 companies here where you're able to build a business. It's very pragmatic and about adding value in both directions, but also kind of very diverse, right? You're getting people from fashion, from fintech, and now infrastructure, enterprise SaaS. Getting a lot of founders coming in from Europe or from the West Coast who are just enjoy all the things that New York has to offer. Um, in terms of areas of investment interest, we're obviously focused on enterprise software, but within that, a number of verticals we're excited about. Obviously, data and AI are a few of them. We've done a number of deals in the um, uh, security and personal productivity space. We've even done some in climate change. And so I think the big theme across them is I would say data. I think it's interesting in today's world where I don't think this will be too surprising. It's difficult to be a pure play data startup now that bar has advanced, right? So data startups are often more about solving the use case and um, adding value as opposed to just kind of collecting data and stitching it together. That bar for data has just continued to get higher and higher as everybody realizes how exciting the space is.
Totally. And thanks for your insights on that. I mean, so beyond capital, what additional resources or expertise do you offer to startups? And like, how do you contribute to their growth and development?
Sure. So, I think most firms are usually going to push their network. Obviously, Parameter is no exception. So, having been in New York and enterprise software, we're fairly connected with other investors or other builders and founders and other startups within various different spaces. And so, trying to be as helpful as possible, both before, during, and after the raise, and kind of partnering with founders to really accelerate their business, right? Whether it's looking for pilot customers or pressure testing their hypotheses, building out the team, trying to plug in gaps and all that. It's ultimately all about people here. I think uh, pretty common, but I guess worth repeating. So for each portfolio company, Parameter will partner and assign a particular operating partner, and we'll have periodic check-ins where we kind of go into the product and go into the business. And it's every founder entrepreneur has a different cadence that they prefer, but we're happy to uh, adjust as appropriate, where it can be going deep into product and giving feedback on a product and product strategy, and whether it's even beta testing specific features and telling where something is not pixel perfect or whatever, or up leveling it onto like product strategy and how they think about competitors and where they should focus their time. So it's really much a partnership model that we kind of customize for each portfolio.
That's very good to know. It's very adaptable and collaborative, works with the startups and their flexible nature.
Yeah, it's the I think it's the fun part about working in a startup, right? There's just so
Yeah.
many so many interesting people in wild space, and I'm sure you found that doing product management for Beyonce, it's the fun and the hard part, right?
Yes.
It's so diverse and different and keeps you on your toes.
Yes, definitely. And like as a founder, if I want to apply to your venture, what is the ideal stage and what's the best way to reach out?
Yeah. So I think seed and Series A is the ideal, but we kind of we're looking for the right fit. So ultimately, so we've done a few day zero checks, including Bearworks, and also done later stage checks as well. The best way, obviously, is to get referred. So, if you can find some mutual LinkedIn connection, happy to speak with your listeners afterwards. You can reach out to me directly. I'm just Albert at parameterventures.com. We run a number of events, so both in person and virtual, and so engaging with those events, engaging with people is just a way to kind of uh, collaborate together to kind of think about business and think about startups together, is always a nice way. We kind of think of it as dating, right? I think there's different ways to date. There's people who have spreadsheets and try to meet as many people as possible, and some people tend to, um, take a more deep dive approach and get to know you first. And we understand it. There's all walks of life. So um, you know, uh, uh, we're happy to date the way that the other entrepreneur wants to as well.
And that's a very like New York way of using spreadsheets to date.
I did not do that, but I've heard it's very popular now.
All right. So coming back to Parameter, it said that you support startups that are pushing the boundaries, disrupting industries, and as you said, category defining. So can you share a success story of a startup that you funded that illustrates this collaborative approach?
Yeah, sure. So a couple examples. That Earthshot Labs is one of those category defining climate change startups. It's a amazing founding team. They kind of built software at Google, I believe, and as well as Two Sigma. And they are all about helping track and improve the monitoring and reporting compliance of carbon credits. And this is a founding team that we've known for a very long time. So they've gone through their ups and downs of their journey. Every startup has your lessons that you learned, and so we understand there, and we've kind of partnered closely with their founders, where helping guide them around areas of that we might be able to contribute. Like I mentioned specifically on product and data.
I
Another
see.
example, another example I might have. So we've also done Civ Robotics, which is a robotics company, Patterns, which is a um, data analysis kind of a no-code data workflow, as well as Justice Text. So Justice Text is a really cool um, data play enabling public defenders to review um, video footage, so basically body cams. And it's a really exciting founding team. They came from the intersection of legal and social justice aspect, and they've gotten some really exciting early traction. We kind of partner with them because it's a first-time founders, kind of pushing them to uh, evolve their enterprise strategy, and thinking about where their competition may be, thinking about where the opportunities will be, and whatnot. So it's more in this case, they already know what they're doing really well. We're not here to change that, but trying to support them in looking ahead, right? As they become this really successful story, trying to get ahead of problems where they might show up.
Great examples. Like, thanks for sharing both. And Albert, you're also involved with the China project. Can you share your involvement and how has your experience changed your perspective on startups?
Sure. Yeah. So kind of background on the China project. It is a media startup that aims to bridge, um, basically makes Chinese news available to the English speaking world. Um, and they started as a newsletter. It used to be called Sup China, and just kind of working with the other advisors to say, hey, look, here's um, the kind of consumer grade metrics that you might see, right? Newsletter conversion rates and subscription metrics like that. Um, they've evolved quite a bit. Super exciting. They now have a biannual conference. They partner with a lot of world-renowned institutions to provide their students with access to Chinese news. They work with investors and founders who are, just want to learn more about China from a business perspective, and so they help them stay abreast with trends and connect them with various players in that space. And like you've noticed, that business has evolved quite a bit. It's been uh, really exciting to work with the various team members, kind of just supporting them wherever I can, connecting them with different folks, and just sharing data points about other businesses that they might have, and obviously talking their head offs about product. They have a free newsletter. For subscribers, they actually have a shared Slack channel where you can actually interact with the team. So the editors, the advisors, and employees and team, they're all on there, and they actively engage with that. They actually have in-person events where it starts with a conference where various business leaders, all walks of life, publicly traded to startups, they'll come out, give their presentations. Economists will talk about the future of Chinese and American relationships, which is kind of a hot topic right now. And the China projects is really trying to be neutral. Their goal here is to just facilitate and foster dialogue. In today's world, it's very politicized. It's a very hot topic, and their view is these are two great powers with a lot of interesting things happening, a lot of interesting people.
Coming back to SaaS and enterprise in this evolving landscape, what trends or innovations do you find most exciting, and how do you expect Beerworks contributing in this space in the future?
Oh man. I guess I'll take the easy answer, which is AI and large language models. I think it's definitely a gold rush at this point, where a lot of interesting startups and interesting technologies. I think probably conventional wisdom is that there's a little bit of hype in the market. AI and GPT won't replace everything, but for certain areas in terms of knowledge search, unstructured search, dealing with workflow, we're in generative AI, we're just scratching the surface. So at Bearworks, as an example, we're already using large language models to do things like audio to text, and also going in the inverse. So we're actually generating voices and conversations that are very realistic, with just plain text. And it's been super exciting for us to see that the quality of the audio and the the affects or the emotion, intonation of the voice get better with every few weeks. And so I think a lot of founders and startups are finding that there's just so much excitement and enthusiasm over this space. It's fairly quick to generate revenue. People are willing to spend $20 a month on GPT really quickly if it, can help you write an email or help you write a blog post or prepare for an interview really quickly. But I think there's also an open investor question of just how sustainable this will be. I think the larger companies like the Datadogs, the Googles of the world that already have these massive data sets, they have this natural advantage. So it's unclear if it'll be complete disruption where a brand new startup will replace Google, but we definitely believe that there's a lot more use cases that are going to happen. And as you think about that, you push the ecosystem and infrastructure is still being built out. The tools for measuring the quality of AI, for deploying AI, for testing your models and stuff like that still needs to be evolved.
Advice would you like to share with aspiring founders based on your journey and experiences as an investor, product director, and now an entrepreneur?
Ooh, good question. I'd say it takes a village. It takes an ecosystem, and I've learned so much from other founders, from other non-founders, just learning and getting feedback. I think by definition, doing a startup, you don't have a lot of resources, and so you're just running a mile a minute. You're trying to accomplish as much as possible as an entrepreneur. But I've been so grateful and so honored that folks I've worked with, like yourself, or other people who are friends of friends have volunteered their time and helped us out and given us feedback, and definitely could not be here without that help. And so I think there's this balance where some founders want to keep their idea um, close to the vest, especially if they think they're doing something proprietary. But um, I think over the long term, the thing I've learned both as a founder and investor is that anything worth doing is going to be crowded. Anything worth doing is going to have a lot of startups and ideas. And so it's ultimately about execution. And over time, I think that marathon process is where you start to show off, your divergence in thought process, your divergence in team, and all those kind of things.
Makes sense.
Talk
It's
and
a
learn
marathon,
from as
not a
many folks as
sprint.
possible.
You've got to keep running. You've been a founder, you've been an investor yourself. What is the piece of advice you got the most often, and would you like to share that with our audience?
Sure. Um, So the first thing I'd say is there's no right or wrong way. Everyone has their own thing. But the other thing is that it's a it's a weird process, right? Because investors, like I said, are trying to make a qualitative decision on something that fundamentally is not quantifiable. Is this entrepreneur going to be successful? And so as a result, it sometimes devolves into a popularity contest. I think this founder who might have come from this background or come from the right company or right school, who's done something amazing, or actually it's just a herd where there's a rumor coming about that somebody might do something, and so as a result, it's a little counterintuitive. So you kind of want to you want to be out there, you want to meet as many people as possible, but you also have to be a little bit secretive. You also have to be a little bit, um, how do you say, flirty, and you know, uh, uh, control your time, control your presence. There's this concept of like a teaser deck and a one pager where you don't want to send the entire everything all at once. You want to kind of reveal it over time. It's going back to that the dating analogy, right? It's getting to know that person, getting excited. I think that's one thing. The other one I would say is showing momentum is always exciting. So whether it's momentum growth of product, momentum growth of traction, or from investors. So if you've already got a committed round, that's always great. If you've already got some capital, that's always great. Even if it's your mom, even if it's yourself, even if it's your friends, that helps significantly. So depending on the size of your round, in today's day, because thanks to inflation, you're able to raise a pretty sizable amount just from friends and family. And what I'd say there is you can go on LinkedIn and look for people who are scouts or angels. Go on Angel List and see who's deployed checks before, and you kind of try and land a few angels, whether they're investors, founders, entrepreneurs, or whatever. It makes you feel good because you've landed some checks, even if they're $1,000 or whatever, a tiny amount. But you've got these team of people who's backing you. So it's great for dry run practice, and you've already started to build that team.
That makes sense. Actually, as a follow up question, it's a bitter sad truth that popularity drives investment in the VC world. What is the piece of advice you'd like to give to our not so popular high school kids who are starting off?
Um, I think that's the best thing about tech, right? I was not a prom king captain or whatever in high school, and so I think ultimately, founders, investors, they're just like us, right? So uh, I think just passion, belief in a product, belief because it's a marathon. You're going to be doing this for 5, 10, 15 years, maybe the rest of your life. And so um, I think that, I understand that a lot of founders just want to build and um, not talk to um, investors, and sometimes it can be like a founder versus investor kind of thing. But you can kind of reverse the roles and think about it. Well, you're probably gonna have to be doing sales and selling at some point, and that involves people. You're gonna be building your team, unless you're so incredible. It's gonna be a one person company, and you're gonna have to work with people, and hopefully things go well, and you're gonna go public, and you're gonna be working with Wall Street or investors and all that kind of stuff. So ultimately, business is about people, and I think the big thing I learned for me about sales that got me overcome, my initial fear is that sales is just working with people, and they're just like you or me. We're all experts at one thing, but also beginners and novices at others. So it's a very it's just having conversations with folks, and so um, there is going back to your point, Priyanshi, about sales being popular. That's a personal preference. I think people have different philosophies about how much they want to sell and hype things up. But I can say that a lot of investors obviously agree and appreciate the honesty too. So just being yourself, I think, is a good start.
Makes sense. Thank you so much. This has been really wonderful.